currently responding down about 1%. I want to bring in Alan Nutman, Chief Market Strategist at Agora Financial. Alan, you've got a real interesting trade for us, but first this morning, let's talk the overall market, some nervousness around last week's quote-unquote deal.
Come on, Oliver, can't you just enjoy a couple of days of stock stability? Please, please.
I'm loving it,
This is
Alan.
good news. We had a relief rally. For right now, things seem a bit stable. We did touch or get very close to the 3,000 level in the S&P, so we're getting a nice little shot up. VIX made 3 weeks lows. We're coming in earnings season. We can get back to fundamental facts, and we can put some of this behind us. Please, let's enjoy some of this.
All right, so Alan, if we enjoy it too much, though, here's the point. We're back down VIX 15. But I guess to your argument, look, this is a market still where when we've had clarity or relief on the trade front, we can get down to VIX 13, 14. It hasn't been that rare.
Exactly.
Yeah.
We're 2% away from all-time forever highs. You know, let's just reflect on what we've been through. It's been a long 10 months of 2019, that's for sure. But, you know, the markets have remained resilient and strong in strength. And, you know, I don't think we should be within, you know, obviously we should take a shot at these all-time highs. Let's see how the markets react. Let's make sure this is just not a fake-out breakout and make sure we get some follow-through on this.
All right. So that being said, today you're going like way into the weeds. You're going into iron ore mining companies, right? You're talking Cleveland Cliffs. Alan, what's going on here?
Well, let's look at this sector that's really suffered. We've talked about U.S. Steel, we've talked about tariffs, we've talked about aluminum. So this is an iron ore mining company. Now, this stock has been beaten down and battered. It dropped from $12 in August down to $7. It's made a nice double bottom at $7. So risk reward, I like this play. We could get a nice little bounce back, and we could see it come back to the halfway point of 10, which is also that breakdown point. So looking at an options play here, an in-the-money call, stock substitution strategy, buying the $5 call for January. I was looking at the November option, and I went, oh, geez, for $25 more, I can go an extra 2 months of time just in case. So looking at my indicators, I see a lot of smart money paying attention to this stock, and the $5 call right now is going for about $2.75. And it's $2.50 in the money. So our break even on this is very, very close, a lot of time, and leaning on that psychological $5 support.
Alan, if we actually take a look at XME, guys, if we bring it up last week, the metals ETF had a real nice response to some of the trade hopes. Alan, this kind of comes back to the conversation about what drives the market, though, because you look at these companies, and it's almost kind of like a pseudo-reflationary trade is what I'm describing it, for lack of a better word, on the back of the tariff hopes.
Well, I'm looking for a short squeeze here. A lot of these stocks are so oversold. This stock is down, I think, 40% from its highs, and at some point there's going to be some value. It got caught up in the commodity crush, and the reality is that that those are oversold based on all this worry and all this concern about the global growth slowdown and obviously these tariffs. So I think there's some solid risk reward levels here, and the way to play it for me is with some longer term options that are in the money. They're going to act like the stock. The delta on this option is 90%. So it's like being long the stock but having limited risk and plenty of time for good things to happen.
All right, so real quickly, back into the trade, CLF, you're basically looking at the stock replacement, right? So it's going to move like the stock, Alan. The advantage of that being what? Right. Just cost to put on the trade?
Exactly. Instead of buying the shares and tying up those funds, $275 is what we're paying for the option. Each option controls 100 shares of the stock. So it's going to give us a solid return on a modest move in the underlying stock. That's the benefit of using an option. Is number one, you have some staying power, and number two, it's the percentage payoff on a modest move. If the stock moves to $10, this option will almost double in value. So that's what we look for to get these solid risk reward plays.
All right, Alan Nutman, I like it. Enjoy the VIX 15, Alan, and we'll
for
embrace
right now,
the stability too.
You got a few more minutes to enjoy for right now.
All right, you got it, Mr. K. We'll see you soon. He's the Chief Market Strategist, Alan, at Agora Financial. Let's go back to the macro issue from last week. Trade